Welcome, everyone, to the Lightspeed Investing Podcast. Today, I've got Dr. Jeffrey here. He is the CEO of Spinal Kinetics and the founder of the Smart Injury Doctors Program. He's been a licensed doctor of chiropractic for the last 33 years. Dr. Jeffrey, thank you so much for taking busy time out of your busy schedule to join us today. We'd
Yeah,
love to
absolutely.
hear with our audience your journey and your insights on what you have been able to see with Lightspeed investing.
Sure. So, just as you said, look, I'm a CEO of a medical company that does spinal injury testing called Spinal Kinetics. In that company, I've developed technology. We've actually helped to develop AI that auto detects for a serious spinal injury condition, probably one of the most prominent condition that causes chronic pain. So I've been heavy in this tech area, heavy in this area of research. First 17 years, I was in private practice. I've published research. So I've gotten very heavy. I've been an entrepreneur for my whole life, a small business owner, and run my own business for my whole life. I happened to meet one of the lead trainers of the program here at a convention. He introduced me. I had done investing before. I've done real estate investing before, and some little bit of stock investing before. And so he introduced me to another area that I never even thought of, and that's how we got here.
Thank you so much for that. So please tell me, from a medical professional's perspective, why do you think that is important for chiropractors and physicians alike to learn short-term investing?
Well, it's like anything else. I mean, you look at it and go, short-term investing can provide really nice cash flow. It can provide an additional source of cash flow. So, most busy entrepreneurs are in doing their business thing. I know I was in, if you're running a practice, it's very busy. It's like any other business. You're dedicating, you got to keep your focus onto it. And there's times when you go, okay, I just need to look, I want to look at something else. You got to take your attention off of it. Short-term investing can be an incredible side thing to give your attention to, that can be very productive of additional income for you. So that's how I got to it.
Gotcha. And as you know, we trade the commodity futures and commodity financial markets as
Yeah.
opposed to stocks, real estate, right, and other traditional markets. Do you mind sharing what you've seen in regards to the leverage that you can have when compared to other asset classes?
Yeah, I remember when I first met one of your representatives, and they were saying, "Oh, we trade commodities." I thought, "Oh my God, the only thing I've ever heard about commodities is super high risk. You lose all your money." Didn't know anything about it. Gold, corn, oil, gas. Just didn't know anything about it, and thought it was a highly risky thing. Once I got into the program and I actually started looking at it and watching the trainer and getting the education, I realized, oh, wow, it's a lot lower risk. Now, everything comes with risk. Starting a new business comes with risk. 95% of all businesses go out of business. So, being a business owner is probably one of the highest risk things you can do. So people that are in business are used to risk. But what I didn't realize was that the risk was a lot lower and the leverage was a lot higher than what I'd ever heard of before. And as I started to see it, get educated, and then more importantly, watch the trainer actually do what they were teaching,
Hmm.
I realized that the risk was much, much lower than what I thought.
Do you mind, just for the audience as they're listening in, to give them some specific examples? What ratios of risk and reward are we talking about when we first approach these markets?
Teach them 1 to 3. They teach them 1 to 3. So if you're putting $50 in, you're looking to gain $150. If you put $500 in, you're looking to gain $1,500. If you put $1,000 in, you're looking to gain $3,000. So you're risking 1,000 to get 3,000. You're risking 50 to get 150, or you're risking 500 to get 1,500. So it's a 1 to 3 risk ratio.
And are we fixed at that 1 to 3, or can that number be adjusted accordingly?
No. So, one of the reasons why you educate and get educated is you're developing a skill set. As you develop that skill set and you get really skilled with it, then your leverage can go quite a bit higher. It can go 1 to 5, it could go 1 to 10, it could go 1 to 20. It can go significantly higher, but the initial targets, the initial training, the initial, hey, you're in little league here, is the 1 to 3.
Gotcha. Thank you so much for that. Of course,
Yeah.
most people are very apprehensive about the risks, volatility, and fluctuations in the markets. And for us, volatility is very vital, right, in how we do what we do. Do you mind kind of sharing your thoughts on, even though there are these risk, volatility, and fluctuations in the markets, why is it actually of an advantage for us to essentially leverage those, the right way, when compared to these other asset classes as well?
Yeah, I think like most professionals that aren't traders say that their background is not trading. When you hear volatility, you think of, okay, geez, that's reward, that's a area for me to lose. If it's highly volatile, I can lose, and you can with volatility. If you're not right, you can with volatility. But you kind of think of it as a business owner, volatility being the amount of business. So volatility for a business is, wow, I've got so much business coming into my business, I can barely handle it. You would say that's a highly profitable business. You manage that right, it's going to be highly profitable. If no business comes into that business, then you're losing money,
Mm,
right? In the market, the volatility that you want goes both ways, goes up and goes down. Markets go up and markets go down. If I'm in the market, let's say I'm in a market and I bought a share of stock at 100 and it went to 300, then it went to 50, then it went to 120, then it went to 25, then it went to 65, then it went to, and at the end, it's at 110 and I sell it. I made a $10 profit. In these markets, in the volatility, when I buy this thing at 100 and it goes to 300, I can sell. Now, I can also say, good, I think this is going down. And when it goes from 300 to 65,
mhm.
I can actually participate in that and profit as well. So the volatility just means the up and down motion of it. And the more volatile it is, the easier it is. And the faster the returns are.
Right. And if you know what you're doing, you can essentially take profits the right way, right? As opposed to being freaked out by these movements, correct?
Yeah, that's why training is required,
Mm,
right? That's why training is required because it's a different way of looking at it. And most people, like I remember always hearing in the stock market, oh, it was a really the stock market went down because people were taking profit.
mhm.
And I was sitting there thinking, well, I didn't take any profit. Like who was taking profit that made the stock market go down, and how did they do that? Right. So the volatility is you can gain whether the market's going up or the market's going down. You just want market movement. And so
Exactly.
these volatility just means movement in the market, and they move. And if they move, you can profit from those moves.
Thank you. And so many individuals aspire, according to traditional advice, for higher education to achieve a six-figure income, right? I myself was an aspiring surgeon. You actually went through the chiropractic schools to get educated. Now, in regards to this game itself, why do you think it's important for others to have public awareness about why this exists and how to take advantage of it accordingly? Like, especially if another pandemic was to happen.
Yeah. So, when you talk about really what you're talking about is education. If I want to be a doctor, good. Today I'm going to spend 12 years and, for $500,000 to get the right to earn a living. If I'm a chiropractic doctor, I'm going to spend 7 or 8 years and I'm going to spend, $250,000, $300,000 to get the right to earn a living.
Mm,
So, there's a long runway there. Here, why it's important is that it's a short runway. The educational time is much shorter. You still have to learn a skill, you still have to learn it, but there's not nearly the amount of time. Plus, the beautiful thing about it is that when you look at something like this, if you're going to look at something other than your practice, and I'll tell you as an entrepreneur, you get very focused, and sometimes I like to take my attention and put it on something else for a while. This can be really the something that you want to put your attention on because it can be very lucrative for putting your attention in this area. But your educational runway is far less, and in order to scale in this particular business, there is no additional employee need. There's no marketing. There's no, all the things that come with running a business does not come with this. And if you treat it like a business, if you treat your investments like a business, um, that's the thing that is I think that's going to be very attractive to any business owner, because we all know, everything that you ever want to achieve is on the other side of hard or the other side of fear,
Hmm.
right? Fear, I made a wrong mistake. Fear, I shouldn't have spent this money. Fear, constant fear of your decision, fear of making a mistake, or this is too hard. Everything that everybody wants is on the other side of those barriers. The key is finding an expert in any area, right? We do injury training, right? Years and years and years of it, and years of coaching in it. So you want to find a coach or an expert that not only can give you good information, but is doing it. I mean, I can go to MIT right now, and I could probably get the top bridge builder in the world is at MIT. He's the top professor. He's read every book on building a bridge, knows everything there is to know about building a bridge. But if I put him on a bridge site, he can't build a bridge.
That's right.
Okay, now here's what the bridge builder knows. The kid or the guy that went through that education, builds the bridge, knows that 95% of what he learned was not really what it takes to build a bridge. He understands the 5 key concepts that it takes to build a bridge. That's the difference between an expert that's a book expert and one that's really here, in this case, trading. And that's what I love about this program is you see the trader trade. So you don't just get the education, you see the application of it. And when you see the application of it and the preciseness of the application of it, it's possible for you too.
Thank you so much for that. And so when you actually witness the live market performance, for you personally speaking, like when you started witnessing it, right, having zero knowledge to being more and more immersed, what was it about the live performance that really, not only compelled your interest, but got you super engaged and, excited about this particular market opportunity?
How does he do it that accurately? I don't think anybody could. If anybody went in on a session, I don't know if you'll give people a chance to go in and look on session. Anybody that goes in on a session, if you looked in on a session, you're going to have the same, same takeaway I'm going to have. It's like, okay, how does he do that with that kind of accuracy? And in time, you learn that he's using a system, and he's teaching that system, and he's using 5 or 6 variable indicators. And those indicators, now he's quick on the draw. A hitter that's going to hit a baseball, I'm just going to use that analogy, doesn't think about hitting a baseball because they practice it so much they don't have to think about it anymore. At first, you're thinking about it. You're okay. Do I need my elbow up? What are my shoulders? Are they? So that's the initial part. You getting to the part where you're actually able to do it that quickly, but having somebody show you, like I said, if I'm using the hitting analogy, if I see the hitter and the hitter actually hits and they're just hitting home run after home run, or they hit a line drive to right, hit line drive to center, line drive to left, I can see their technique. And then I can start to mimic that technique. No different here. You can see it and you go, okay, it's live. I mean, there's nothing better than seeing, because seeing is believing. There's no, at that point, there is no, oh, there's some promotion, or this isn't really true. You see it live, true.
That's right. It's being demonstrated in front of you, correct?
Demonstrated right in front of you.
Yeah, and what's the most exciting part is not just the trader's expertise or the coach's expertise in this case, but where does it come from, right? When you follow traditional advice, you typically hear being doctor, lawyer, or engineer is one of the best ways to go. But if you did your due diligence, right, you would find that the top 42% of the world's living or richest actually play this game for a living. So, what are your thoughts on that when you found out that information?
I wish I'd have run into you guys a lot earlier. Like a lot earlier. Life would have been different running into you guys a lot earlier.
You're so kind. Thank you so much for your time today. Dr. Jeffrey, is there any concluding remarks that you want to share with our audience in regards to why other fellow medical professionals, whether it be chiropractors or physicians, should look into this a bit more closely?
Now, if you have an interest, if you had an interest in trading and you've had interest in that, it's a highly lucrative game. It can be a highly lucrative game. You have to play it. You have to get skills with it. But if you're looking for a group to teach you, this is the group.
Thank you so much, Dr. Jeffrey. I appreciate your time today, and I look forward to strengthening our relationship even more.
You're welcome.